for taking the invite and joining. I titled this presentation, as you see, how do you know what you know? Primarily referring to backtesting and observation and experience as a way to figure out how things are going to be and how we will know what we know about investments. Okay. Now, this meeting is being recorded. Okay, that's right. Yeah. So everybody talks about the market is all powerful, and the market has a random walk, and that we can't beat the market. Okay, and therefore one standard suggestion from financial advisors is that let the market do its magic. You just buy and hold, and you will get your returns. Okay, then the question is, in which stocks will this magic work? If there are 2,500 stocks out there, will this magic of good returns, whatever be the good as you define it, will that magic work in all the stocks, or only in certain stocks we will get high returns? Okay, so how do we then know which stocks would give good returns even in the buy and hold? And I'm going to define for our purposes here today good returns for the magic being 30% per annum. So if I buy and hold stocks, I expect 30%. So in which stocks would we get that 30%? And that's something we need to know before we make such investments of buy and hold in such stocks. Okay, so if we decide that passive investment is the way to go to get the 30% return in some of these stocks, we still need to know which ones to invest in. So there is still that question: how do we know what we know? Okay,
and also the timing on when to buy on passive. Yeah,
that is right. So one is which stocks to invest in, and when do we invest, or when do we enter such stocks in order to make the 30%? That's right. So once we identify such stocks, if we can beat the market, that means we can get more than 30%, or more than whatever that buy and hold strategy gives. That's much better. So my answer to the question is yes, surely we can beat the market. Then the question is, it needs an active strategy, and what kind of strategy are we going to adopt? Okay, how do we discover such a strategy? How do we know what we know? Coming back to that question. Okay, and I start with the simple average because it's, yes, please. Okay. So how do we discover such a strategy? And for that, I start with the simple average, because the average, the mean, is a very powerful concept. It's not just a statistical artifact. Okay, everything revolves around this mean. It seems to be something that smoothens out all the noise, and various studies found that the simple average seems to give us the answer for most questions. So if we know the simple mean around which everything deviates, then we can say we want to make X times more than the simple average. Okay, so it's like if you want to be the topper in a class, your first step is to be above the average in the class, and then take the top ones and again try to beat that average. So if we have to beat the pack, we need to know the average of the pack, so that we can be above the average in the stocks that we have picked. So the first thing is which stocks do we invest in, which will give us the 30% on a buy and hold strategy. And then among those stocks, if we have an active strategy of buying and selling, so that we can beat the market returns of the 30%. So that is what we are trying to do in this, okay? So if you know the past of the price of a stock and how it has moved, my premise is that we can know how it is going to move from now on. So backtesting, therefore, is to me a key thing in making good returns from our investments in the market. Okay. Then the question is, how do we backtest without this being a very tedious process? Because if we have to manually go through the chart and study and whatever be our strategy, there are two things we need to know. One is, of course, as someone said here, the time period, when do we invest and when do we get out? But which stock we are going to be in and what strategy will work. The strategy is a set of rules for buying and selling. So if we use the same set of rules across multiple stocks, we need to do that one round. And then if that strategy does not work with any of the stock, we need to fine tune our strategy and start the backtesting once again. So it's a very tedious manual process. And what we have tried to do, not that we are the first ones to do it, there are several others, but we think our products are simple enough to help you do the backtesting fairly fast. And not only that, to also compare your strategy results with that of the buy and hold passive strategy as well. So if we know how the price of a stock has moved in the past and given returns, we hope that going forward, if we follow the same strategy for that stock or for that pack of stocks, we'll make similar returns as it was done in the past. Okay. So when to buy and when to sell is one part of the strategy. Okay. And we have used a very simple thing because, as I said, the average is a very powerful concept. So we said we'll just use the moving average as the main criteria for deciding when to buy and when to sell. Obviously, there's a trial and error process to go back and forth to decide which pack of stocks will give us a return and which strategy or which set of rules will help us get that market beating return in that pack of stocks. Okay. So once we have identified a set of rules, a strategy, which seems to be consistently giving market beating returns for a set of stocks, then we focus on those set of stocks and that strategy which we have finalized to go forward and make the active investment strategy for us. Okay. So our tool in this case is a simple average based tool. We are not using any fancy technical analysis, simple moving average. So the price vis-a-vis the short-term, medium-term, and long-term moving averages, and among the three moving averages, crossovers as well. And based on this, we believe that this tool can help us identify the pack of stocks that can give you market-beating returns. Okay, so as I said, simple moving averages. So in this case, we've used a 9-day moving average, a 45-day moving average for medium term, and 200-day moving average for long term. So our tool is pretty fast, that in 20 seconds, you should know the truth about what returns you can make for the stock that you have. Okay. So I'm going to show you a demo of the product itself so you know how to use it. But before I go into that, any questions or comments so far? Okay, so Madhu is going to do the demo, but the goal that we have set for ourselves in picking the strategy and picking the stocks are these two. We want stocks that can give 30% at least per annum in the buy and hold strategy. Okay, so if there are 2,500 stocks plus above in the market, we want to pick those stocks that can give us 30% per annum in the buy and hold strategy. Okay, now you can change that. You can say, I want 20%, I'm happy with it. Okay, but when we worked out, we kept 30%. Okay, but in picking these stocks, you still need to know when to buy, as someone said, because the starting point is very important to get this 30%. Then which stocks can give more than that 30% in an active strategy. Because if we are going to spend time and effort in buying and selling, we expect more than this 30% CAGR. So those are the two goals that we set when we went about building this product and looking at the outcomes. Okay. So I'll now hand over to Madhu to show us the demo of the product, so that after the demo, we'll take questions and answers, and then I'll talk about what we are planning to do going forward with this product to help the whole process of investment. Okay, over to Madhu.
Yeah, thanks everyone for joining. I will share my screen. Okay, I hope you can all see my screen.
Yeah.
Okay, so I'm going to start by signing in because this does require you to register. Just use your Google sign-on. So most of us have Google accounts. I'll pick the first one here. Okay, so I'm signed in here. So what do you see here? Basically, this product will work both for US and India stock markets, but I will demo some of the US ticker symbols in here. And if time permits, we can go into some India stocks as well. And so basically the from date to date, I'll just step through each of these. So I already did define a strategy. Okay, it's called New Age Lending because that was the last thing I was doing, is testing out this stock. So if you pick an existing strategy, it will fill out the rules that were already there. But let me go through the rules right from the top. So on the left side, there are buy steps. On the right side, sell steps. You need to define both of them before you can start backtesting. So what does it say here? I want to buy when price is about 9 DMA. DMA is daily moving average. It's just a simple moving average. So price is about 9 DMA, and or you can basically combine. You can say, then I also want to say if the price is above or below 45-day, and then you can pick the long-term moving average, as Sankaran sir said, the 200-day. So I'm going to pick 9 here and about 200-day. So I care about the short term and the long term in this particular strategy. And then the 9-day needs to be above 45-day for me to consider that as a buy criteria. And I can skip this step. I'm not going to define 45 in here. And then moving on to the sell steps. In this particular case, yes, I could define the price as against the different moving averages. I will skip that for now. But what it really means is price below the 9-day moving average. 9-day moving average is the short term, right? It's just the last 9 days. And what we are trying to say is if the price is below last several days, then that's a warning signal and I may want to get out. And then the second option here is yesterday's low. Basically, we started off at a price today which is lower than yesterday's low, which is also called gap down. I don't want to pick that right now. I'll go through it in a separate example. Or if it's less than the medium term average, which is 45, or the long term, which is 200. So I'll just pick if 9 days is below 45 in this particular strategy, that's a warning signal, and I do want to sell at that point. So that's the only rule I select. So having defined the buy and sell steps, so you have to think of them as pairs, right? A buy criteria gets applied, you buy the stock, and then a sell get applied, you sell the stock. So there could be a number of such transactions in your date range. In this case, I'm going to pick a date range that the entire duration of the stock UPST, they are a lending company. So during the entire duration, there could be different transactions. So we are saying if any given transaction is going to make a loss, it's possible. So then that's why I specify this override. When trade will make a loss, then I want to say skip the transaction. So basically don't execute. I've selected that. So now I'm going to validate these inputs so that it puts it all together in English language format, like you see here, opening price greater than 9 DMA. So this is the key. So once you see this, that means your rule is set. You have defined everything. You are ready to start backtesting. So let me hit backtest. I don't know if you're all timing the 20-second. Okay, then it redirects you to results page. So what do we see here? So in all of this backtesting, $10,000 is assumed to be the starting investment. So $10,000 invested into the stock UPST on May 16, 2023. I think that's close to their IPO date, has resulted in these results, right? You see 3 columns in here. So the first column is giving you the name of the strategy, which we picked, new age lending companies. And then these 2 are the buy hold that Dr. Sankaran mentioned. So buy and hold meaning you buy it once and then you don't sell it till the last exit strategy. That happened August 15th, 2025. That was the last signal on which our sell applied. The sell rule being 9-day moving average less than 45. So coming back to column 1, so there were 4 different transactions between May 16th and August 15, 2025. So we had a return CAGR of 90.49%. And you can compare this against a buy and hold strategy where we bought it on May 16th and we held on to it till August 15th, which is yesterday. And that gave you a return of just 67%, which is still good, but not as good as this strategy on the left. And then there is a third column in this particular example. The exit date on both these buy and holds are the same. But this last column, what it's referring to is from your price history, you exit on the last trading day. So it so happens that these 2 columns happen to exit on the same day. So the numbers are the same. So then you can basically download different files. You can download the detailed transactions file, cash flow summary, and summary CSV file. Let me open one of those just to give you an idea.
As you get ready to open it, Madhu, once again, I just want to highlight one thing.
Yeah.
While Madhu was focusing on this 90% versus 67%, I also look at the last but one row, the exit value, where we got $42,000 versus $31,000 for the buy and hold. So the actual cash that we get is also an important thing. So I look at both the CAGR as well as the cash on hand on exit. Okay. Now the IRR that you see, which is the third row from the top, only gives you the percentage based on the actual cash flow and the date, which is valid for, which will be different from CAGR for the active strategy. Whereas for the passive strategy of buy and hold, the CAGR and the IRR will be the same because there's only one buy and one exit. So it's just an additional number for you to keep a eye on. But what is to me very important is the CAGR and the total amount that you get out of each of these strategies. Okay, yeah, please go ahead.
Yeah, so CAGR, as we all know, is compounded annual growth rate, and IRR is just internal rate of return. So I've opened one of this first thing that says transaction file. I'll just go through it quickly. As I said, there were 4 transactions, and all this file has is pretty much is being transparent about every one of those transactions. The gain or loss for this specific transaction, cash was $10,000. How many shares did you buy? The buy date, buy price, the daily moving average at the time of buying, 9, 45, 200. And then the sell date, when did that happen? That happened like 3 months later. And then the sell price, sold amount, so DMAs, and number of days held, right? So you can pretty much validate this, or you can open it in spreadsheet. And then if you're used to seeing charts on investing.com, you can bring up a chart and then you can just see, oh, does it make sense? Yeah, so that's why this file is useful if you want to dig deep. And there is a different file called cash flow file, which is just a different view, which has a buy or a sell in each row. So the first row is you put in $10,000, you got back 16,000, you put back the 16,250 back into the stock, and what did you get back, so on and so forth, till your final value of 42,885. And then how many shares did you end up with? You started at 500, you have 671 shares, and what were the different prices?
No, one thing here. Here the assumption is you start with this $10,000 and you buy whatever number of shares you can buy at the price. And when the sell signal happens, we sell all the shares, whatever we have, and get that money. And when the next buy signal comes, we reinvest all the monies that we have on our hand. So there's no withdrawals assumed in this. Okay, go ahead.
And then this last thing is, say you finish the test, you get out of the app, and then if you had already downloaded the files, you get to see the summarized result of one of the tests that you downloaded. So that's all that this is doing. But it just has a little more detail than what you saw in this table. So how many round trips, what is the IRR, all of that. So, and then the same thing is also available in a spreadsheet form if you want to just look at it in Excel. So that's pretty much this test. And what I'm going to do now is go do a different example.
Well, you got the first example to show the good things that the active investment can make a lot more than passive investment, but it may not be the case always. Okay, there might be stocks. I mean, we will go through some examples. We'll take some names and dates or strategies from you and show you some of them as well. So it is a process of trial and error. You need to be able to find which stocks can give you more than market beating returns and for which strategy. Okay? In fact, what I suggest, Madhu, instead of taking an existing strategy, you may want to type a new one and show them as well.
Okay, makes sense. Oh, I'm sorry. There's somebody needs admitting.
Yeah.
Yeah. Okay, I'm making sure that nobody is
taking
waiting.
Meta now, okay?
Yeah, so I'm going to take Meta now. I will start with the date range about 10 years back in history. So let's say 2025. That's what I'm generally interested in, is the more recent ones, because companies like Meta have a longer history than that. But I'm just interested at the moment in the last 10 years. you can actually pick the date right here. Okay, that makes it easy. So you're saying, yeah, something like that. I give it a name because Meta is also in social media. So I'm going to say the first thing is the price. I definitely want price to be above my short-term moving average, which is a 9 DMA, and the price is above 45 or 200. I'm more interested in the 200-day moving average, that it should be above the long-term moving average as well. So I also want to be really stringent. I'll also pick the medium term. So I want to be just make sure that the price is firmly above all of the moving averages. That's when I'm interested in buying a stock like Meta, right? And the 9 day certainly has to be above 45-day. And I'm going to say 45-day is about 200 as well. The medium term is also above the long term. So I defined my buy steps.
So this means that the stock is really on an uptrend, huh?
Yes, that's my strategy this time.
Okay.
And because I've seen a lot of volatility and I want to make sure that I'm really getting in on a firm buy footing. So
Okay.
now I have some sell steps. I'm going to say price is below 9 DMA. That's a warning signal. And then I'm used to seeing charts a lot of time. I see this thing is very distinct on a chart. It has a certain trend. And then there is this thing called gap down. So suddenly the price drops on a certain day. That's a real warning signal for me. So if today's low is less than yesterday's low. Today's starting opening price, if it's less than yesterday's low, that's warning signal. So I picked that. And I'm going to pick the usual. If 9 is below the long term, yes, I'm going to pick that. If 9 is below 45, yes, that matters to me. So that's part of my sell signal. And like most of my strategies, I will say any given strategy is going to make a loss. Any given transaction, I want to skip that. So this is the override I will pick. So I'm going to validate the inputs. Okay.
So what you're saying is if a selling trade is going to make a loss, you don't sell, you keep the unrealized loss, is it? And keep,
Yes, correct.
okay. Okay.
Yeah. I just, I'll just not sell at that point. Yes.
Yeah. So took 8 seconds.
Mm, cool. So, okay. So here are the results here and the name of the strategy again, and then the rules that you defined pop up here. And then you see the buy and hold. In this case, the buy and hold definitely beat the strategy hands down, 23.5 versus 14.53. And then this third example is what I had mentioned before, that this buy and hold is all the way till the last trading day, which is yesterday, August 15th, whereas this buy and hold is still the last sell signal which I had defined. So that happened on February 19th. So on the best performer here is the one that exited on the last trading day, 83,512 versus 74 for this buy and hold strategy. And then for our strategy, just 36,361. Look at the power of compounding here. So, and then for this 14.53 percentage, we had to go through like 40 round trips in 10 years, which isn't bad, about 4 transactions a year. And then the IRR is 16.4. So, and then the usual files that you can download. So, Dr. Sankaran, you have something to say here?
Primarily here, we have shown two examples. One where we had a UPST which beat the market, and here Meta, with all the action, did not give us market beating return. But then even the market return of 23% is not exciting to me. So in the last 10 years, Meta's behavior has not been satisfactory to me. So going forward, I may assume that the same thing may continue. But before I do that, I'll try out a lifetime behavior of Meta to decide whether I want to try that. Okay, or
Yeah, question.
go back to the back test and
Yeah,
see this strategy maybe was too stringent. Okay, so if you go back to the back tester.
hold on. I think Ashish had a question. Go ahead, Ashish.
Okay, sorry. Yes, sir, Ashish.
Yeah.
Don't
So
stop.
we sorry, can you hear?
What are you doing, bro?
Oh,
You
hold on.
can, yeah, you can mute. Yeah.
Okay. Oh, well, I know. I don't understand what was doing.
Subha, can you please mute?
Yeah, I did. Yeah, go ahead.
Yeah.
Okay, thank you.
Yes, Ashish.
Thanks a lot, first of all. But just wanted to check, like in the two examples which you have taken. So
Yes.
now, uh, uh, means like, what is the messaging we want to understand? Like, let's suppose in first UPST, the returns looks very good. The second one, Meta, we have taken probably the longer period, and it's a stable stock. So it took us like if we keep on holding it, it was basically like would have given us the more return rather than keep round trip or keep selling it on the signals like back and forth, right? so
Yes.
so probably some messaging is there in terms of like how to choose the stock, or at what point of time this strategy should be employed, or what exactly is the key message, Pankaj?
Okay. The key message is what I was about to show you. Either the stock can give the return if we just buy and hold, or a different strategy, which is not so stringent as what Madhu put up, could perhaps give us better. So let's try Meta once again. I'll do for lifetime or even for the same 10 years. Can you put the same 10 years?
Same 10 years? Okay.
Yeah,
Yeah.
same 10 years. So the message is yet to be fully formed. So we have to do this trial. Okay. So now you
So,
call it Meta strategy 2. Okay. Here I say I'll buy when the price is above 9 and 200. I'll not put 45.
okay.
Earlier, you had put all the three DMAs, the price had to be above. So I'm now saying no. I'll buy when it's above 9 and 200. I want only 9 greater than 45. Okay. So these three are good enough for me to show that the price is going to go up. I'll come to sell. In sell, I will not be very stringent. I'll just say price, 9 has to be less than 45. To me, that is a important warning signal to get out. And I'll say don't sell on loss-making trades. Okay, which
but
means I
but
don't
price
mind.
also but price also has to be if it goes below 9 DMA, then that is a sell signal, right, sir?
I agree, but I don't want to rush.
Okay, got it. Okay.
So my strategy is if the 9 goes below 45, which means the short term has gone below the medium term, that's a real warning signal for me. That is when I want to get out. But then I don't want to get out if it's a loss-making trade, which means I don't mind a drawdown. I'm willing to be patient, okay? Because I think the stock is going to go back up.
And
Yeah,
my another question is related to the down below this check mark when trade will make a loss.
yes,
Uh, what does that mean exactly? I couldn't understand that
sure.
fully.
That means I don't want to exit if the trade will make a loss, which means I don't mind a drawdown. I don't mind the price going down because I think it's a good stock. It's going to come back up and give me the returns. If it's a profit-making trade, I will sell. If it's a loss-making trade, if the 9 has gone below 45, which means I'm making a loss, I don't want to sell. I'll rather hold on.
Okay.
Because in the buy and hold strategy, we are holding on, right?
Mhm.
So therefore, here in the active strategy, I'm using part of that. Okay. So
Okay.
now you validate the input. Any question on this rule that I've set for myself? Okay, now let's back test. Let's see how much this one is giving. We will know that in 10 seconds. Okay, 8 seconds. Now you see, again, this strategy is not giving me for Meta. It's given only 15% in the last 10 years in this strategy, versus a buy and hold is giving 21%. And if I sell on the last selling trade, 23%. So we try to relax some of the rules, and it's still giving less. So maybe for Meta, we should buy and hold. But even if we buy and hold, it's only giving 21%. Okay. To me, the benchmark is 30%. Okay. So then we need to extend the year. Maybe this 10 years, Meta is doing this. But if I go back, I'll go back to tester, and I put a lifetime for Meta now. Because if we believe Meta is a very good stock, I'd rather look at the lifetime and the same rules. Now I'm putting lifetime to see what happens.
Okay, so I will again repeat the back test. The rules
Yeah.
are the same.
Yeah, rules are the same. I only extended the time period. Now I'm able to get 20%, and in lifetime, the buy and hold is given 29.6, and if I exit on the last trading day, it's given 30%. So over a long lifetime, Meta seems to be giving me close to that threshold of 30% that I've set. But the active trading for Meta is giving me less, 10% less over the lifetime. So if I want to be in Meta, I should, in this case, just buy and hold. I shouldn't be actively trading if I want my 30%. Now you can reduce this threshold from 30 to 20, in which case you might say, okay, I'm making my 20% in my active trading. That's good, I'll do that. Maybe you will change the strategy and see if that would work. So
But
let's
it
go
is
back.
still
Yeah.
it has still been giving only for 12 years. Means I don't know whether Meta got listed only on May 3rd, 2013, or is it a lifetime? That's the question
Yeah, we
basically.
put, I thought we put lifetime.
We did put, we did put lifetime. And again, the first trading signal may not be exactly on the IPO date.
Because you see, I said 200. No, the price has to be above 200. So which means the first 200 days there was no trading at all.
Oh, okay, got it.
Can you check when it went IPO, Madhu?
Yeah, but when
Just let's do a double check on that.
18th May 2012.
2012. So 200 days, so about a year.
Okay.
So and hence you see 2013.
Correct.
Got it.
Okay. So now let's go back and relax the rules some more.
Do you want the same stock or?
Same stock, lifetime, because he's interested in Meta.
Right.
We change the strategy and put strategy 3, Meta strategy 3. The reason we are saving this under different names is you can get back all those results and compare as well. Okay. So price is above 9 and 200. Okay. 9 DMA less than 45. Yeah, sorry, 9 is greater than 45. No, remove the. Okay, sell signal is sell signal is 9 less than 45. And don't put the override now. So
Okay, let's start the back test.
yes. So we're not putting the override, which means if a sale is a loss-making sale, I have to get out. Look at that. Obviously, override is better because we're comparing against a buy and hold. In a buy and hold, there will be drawdowns. So clearly, the message here is that if a sell signal is a loss-making trade, don't get out. Hold on because you believe in the stock. And this stock can give you 30% if you buy and hold. So there's no point in selling out faster. Okay?
Right.
Okay.
So better way to articulate probably is like if we just test a stock which we believe in and see that like if the buy and hold is giving me 30%, then like why to worry about anything else? If we see that like buy and hold is not giving me 30%, then probably we should look for certain strategies which can possibly give me more than this.
Okay, interesting that you brought this, Ashish. The reason I did not do that is see, when we do an active strategy, we need to be engaged. Now, there are times when we may not be able to be engaged. So I need to fall back on the buy and hold. So I'd rather be active in a stock which, even if I'm not active, can give me the 30%. So I have a fallback. Whereas if I pick stocks which don't give 30% on my buy and hold, hoping that my active strategy will give me, then I don't have a backup. Okay? That is why I first look for stocks which can give me 30% on buy and hold. And then in those stocks, I do the active strategy.
Got it. But
Okay?
another point of view is
Yes.
like means this is the past from Meta from maybe 2013 to this time, right?
Yes. Yes.
But I don't know like whether this can be for 10 years further also.
Well, that's why when I started off by saying we try to understand the past so that we think the future will mimic that. Because the whole idea of technical analysis is that history repeats itself. Every stock has a particular chart, particular behavior. And in a long term, in this case, we took the lifetime, which is now 12 years, okay? A stock has behaved in a particular way across multiple macroeconomic cycles. So we think it will continue because that's the only way we know. I don't have a crystal ball to look into the future, but I do have Pariksh to look into the past. Okay. So coming back to the question, how do we know what we know? We go with our experience. Okay.
Got it.
So this is the best we have to do. So hoping that the future will be the same as the past. Okay.
Got it. Okay.
Yeah.
Yeah, makes sense. Thank you.
Thank you. Any other questions, anybody? So this is a time for Q&A. Okay. I hope you will all use this product and try out various things. As I said, you don't need to have taken a technical analysis course to try out this because it's a very simple one using only the power of moving averages. Okay, and if just a simple moving average strategy can give us 30% on a buy and hold and helps us to find a strategy which can beat the buy and hold 30%, then we don't need to complicate our life by bringing various indicators and signals and so on, which are all part of the complex technical analysis. Okay, So we have made this product simple enough for this. Now, if you would give me the share, Madhu, I'd
Yes,
like to get back to my presentation.
sure. And I put the link to the product. So
Yes. Okay. So now what we are doing, taking this first stage further, we are extending Pariksh to include the alert feature as well. So once you have decided on a strategy that you feel for that particular set of stocks is giving you good returns and you want to employ the strategy, we will take that strategy that you have identified for that set of stocks and keep sending you alert emails as and when the signals are triggered. Okay, so that it makes it easier for the user to execute the strategy going forward. Okay, and then at the next stage, we are building a portfolio management feature into this product so that if you record those transactions, it will constantly help you to manage your portfolio, look at your performance, and see if this is working out for you. So the tedious record keeping work can be avoided. Okay, so these two are the next steps. We are extending the product going forward. Right now, the product is free for you to use. We have not put the payment feature. Okay, so take advantage of it, play around with it in terms of identifying stocks for buy and hold and stocks for active strategy, various strategies, and so on. This trial and error will also help you to strengthen your own understanding of moving averages and how you apply. Please do give your feedback, by WhatsApp or whatever, way to interact with me. We really appreciate your feedback. In fact, the first set of users gave their feedback, and that's where we incorporated and brought it to this level. So we definitely would love to have your feedback. This session is recorded, so we'll put it in the group. So for all those who have not seen it, participated today, they can participate. So thanks again for giving us your time late this evening instead of watching CNN, where anyway there was no deal. And here we can make definitely better deals than what Trump has done. Okay. So on that note, without offending anyone further about Trump, let me stop here and thanks again. Okay. Yes, Ashish, yeah, go ahead.
So, are you planning to add more indicators also, or just DMA should be good?
To me, I mean, the straight answer to your question is no more indicators, only this. Primarily because of my belief that the average is a very powerful one, and if we use that, we don't need to complicate our life with the various other indicators. Okay, if this gives me 30% and more, why make it more complex? That's my answer. Okay.
Okay.
okay,
Got
and
it.
Yeah.
for some of you investors who also invest in India, it
Yes.
would work with Indians
Oh, yes.
companies as well.
Madhu, can you
Yeah.
show at least one or two Indian stocks, please? I
Yes,
stopped my
let
share.
me
Yeah.
do that. Yeah.
Yeah, we forgot to do that. Thank you for bringing it up.
So yeah, let me start with one of the Indian tech majors that's popular lately among investors, Tata Elxsi.
Okay.
So again, the same
So in this
10
case,
year.
you put the full name of Tata Elxsi. It will pick the ticker, is it?
Yes, for Indian stocks, yeah, that's how the behavior is right now.
Okay.
Because the
Okay.
sticker symbols, there are two exchanges, BSE and NSE. It's not quite as standardized as in the US. People are more used to putting in the company name.
Hey, wow.
Okay.
Yeah, so
Okay, so let's start defining a rule. I will define some of the standard rules that I have for myself. And same thing, I do want to define the override. And we can start the back test.
So Madhu, which how are you getting this data? Like you have directly plugged into the exchange data somewhere?
Yeah, we get pricing from standard backend, like we use Yahoo. Yeah,
Okay.
that's how we get our pricing. It's pretty standard. Yeah. So in this case, it actually beat the coffee can Tata Elxsi, as you can see.
Can you take the cursor to the name? I want to see what strategy you put out. So you put opening price greater than 9 and 200, 9 greater than 45. Okay, so that's my favorite. Then sell rule is 9 DMA. So that's your favorite. The sell signal is your favorite. Okay,
Right.
and we put a override. Okay, very good. And this is giving for Tata Elxsi, huh? Excellent.
Yeah. So we ended up with 143 instead of the 96K. Yeah.
And 37% over 30%.
Yes.
And in the last trading day, it's given only 21% rather than even the 30%. So waiting till the last day is not a good thing.
Exactly, because price might have dropped later on.
Right.
Yeah.
Now, I'll come to Venki's question. He had put a comment. I'll come back to that. But in the case of Tata Elxsi, can you bring up the chart, please, so they can see what the chart is also saying visually?
Oh, okay. Yeah, I will do that.
While you're doing that, Venki, your question is about my background. I was a professor at Rutgers in business, but been investing for some time. But in the last 5 years, I've become a lot more active in investment using technical analysis. I shared my experience. I won't call it teaching. I shared my experience in investment strategies and online courses, and that's how a lot of people in this group have taken my courses, and I share my experience with all of them. So based on my active use of technical analysis in the last 5 years is why I decided to build this product with just DMAs rather than all kinds of other technical indicators. Okay, and Madhu and I collaborated to build this product using whatever Python and other things that Madhu can answer. Okay, so this has been the last 4 months of our work to bring my belief in moving averages into this product. We looked at other such backtesting tools, which seemed very complex and where the pricing was also very non-user friendly. So we decided to make a very simple one on moving averages and also keep the pricing very simple and easy for people to adopt this. Okay. I hope I answered your question.
Yeah, thank you. It's very helpful.
Sure, yeah.
Okay.
So there is Tata Elxsi. You see, Tata Elxsi fell out of favor over the last 1 year, where the downtrend is yet to be fully reversed. So that's why if you go back, Madhu, to the results, okay, you see the date of selling was January 24. So using Madhu's sell strategy, we got out almost at the peak. Okay. And since then, it's been on a downtrend. So the whole idea is, you should study the chart. There's no two ways about it. You should learn how to study the chart, at least with moving averages, okay, and be able to see visually when the peak is achieved, when it's going down, okay. So in this case, Madhu's sales strategy got out at almost near the peak, and since then the stock has been going down. Now, in my selling strategy of waiting for 9 to cut over, breach 45, I may not have sold very close to the peak, but still I would have gotten out when such a downtrend starts. Okay. So in this case, Tata Elxsi has given us a fantastic return based on this strategy. Okay. Now, obviously, we are waiting for the uptrend to start to buy, and we would not have bought till the price goes above 200. And in this case, you see the price did go above 200 in June of this year. June of this year, the price was above 9 and 200. Okay, and 9 was above 45. So, but we would have immediately gotten out. Okay. So this simple moving average strategy seems to help us identify stocks with good returns. Okay.
Yeah, just while on the topic of chart, just a quick thing. That's one good way to kind of learn about charts is to open up this and then just map against the charts. So that way, you get familiar with charts. You can also use this tool to get more familiar with just watching the chart and looking at the highs and lows and when the transactions happened. So yeah, just FYI.
Yeah.
So yeah, learning the chart is really fundamental to be a better technical analyst. Yeah.
Okay. Can you show Intel, please, Madhu?
Yeah. Go to backtester.
Yeah, it's 8 a.m. If people want to drop off, that's perfectly fine. Whoever wants to stay back and ask questions, you're most welcome to. We'll have some more time with you, okay? But those who want to leave, I can understand it's too late for you guys. So we'll show Intel now.
Okay.
So you're taking 10 years, okay? So you put Intel strategy 1.
Okay. Okay.
And Venki, do you want to set a rule?
I don't have a specific rule in mind. I know Intel was going to the very volatile at this moment. I know I am from Portland, Oregon. Mother used to live in Portland also. Intel used to be the major employer. Things have changed. That's why I want to see that based on the your analysis and prediction where it's going. Let's take like a 10 years, 10 years as an example.
Yes. So you put my buying strategy and your selling strategy, Madhu.
Okay. Let's put this and this.
Instead of 10 years, let's put 5 years. 10 years too old. Let's take the latest 5 years, it'll be okay.
Okay. Price is above 9 and 200. 9 is above 45, and 9 is less than 45 for selling. Okay, shoot.
And I have this override.
Yeah,
so
override,
let's do the back test. Interesting.
Well, the buy and hold gave a minus 15%, and the active strategy gave a positive 4%. So now you look at the chart, you will know. Look at how volatile the stock has been.
Correct, correct. Mhm.
Um, in fact, Intel has not been in my radar for a long time. So the last 5 years has not been very good. So we can extend it to 10 years. But then if the last 5 years, recent one has not been good, then, why be with the stock? Because it takes a long time for it to reverse its trend. Okay.
Yes, and then there is a data point here. Sometimes having an active strategy helps you get out early.
Yes.
Yes, because you have
Mhm.
certain rules, and if the rules trigger, you'd be out instead of staying on.
A long time. Okay. If you change it to 1 year, what happens? I know it was in downward hill for quite some time.
Ah, okay. Maybe I'm not studied the chart, but maybe yeah, the chart. How
How
did
did
it
that?
look?
1 year is too short for us to make
1 year is too short.
predictions for the future. Okay.
Yeah, yeah.
Mhm.
Should,
Makes
But
sense.
we'll still do the 1 year, but you can see that on the chart itself. It's not too tedious. So if you look at the chart here, can you shrink it to 1 year, please?
yeah,
Okay. So you see, it has been below 200 except for a few days. So to me, if a stock is below 200, students who have taken my course would know uh, it's with the dark force. Okay.
yeah,
It's
yeah.
a Darth Vader. So I don't want to be below 200. But now you see how it has come above 200 and mine
Yes,
is about to cross 45. This
it's
looks like a good signal.
good buy signal. Yeah.
Yeah, good buy signal. But 9 is still not crossed 45. So I will still not buy. I'll wait for the 9 DMA to cross 45 before I enter. Okay. Because there have been a lot of whiplashes here. If you see from May onwards, it has gone above 45, come down. So it has not been able to be consistent. But now a new top is getting formed, which is above the earlier top. So there are some weak signs of an uptrend getting formed. Okay.
Yeah, this is a previous
Mhm.
stop, and then this is cross that previous stop. Yeah.
Okay. So
The
slowly
the reason it went up is Intel CEO went and met President Trump, and they spoke something. They said there is some kind of a rumor, or U.S. government might invest some money for the future of semiconductor industry in the U.S. If
Right, right.
Intel flops, then it will be a big challenge for the whole country. That could be some indication. It has not been announced publicly. That's what the rumor is.
Yeah,
Hmm.
so the chart is always ahead of the news. So
Okay. Oh,
the smart investors know something is cooking. Okay,
correct, correct. Mhm.
that is why you see that in the chart, you see the breakout on Thursday.
Right.
And before the
Mhm.
breakout, for 3 days, it's been above 9 and all closing bullish. So the smart investors already have gotten onto it.
Mhm.
Okay.
Makes
Um,
sense.
So definitely there are some early signs of an uptrend, but I wait for 9 to go above 45 before I move in. Okay.
Okay, makes sense. Okay.
Yeah.
Good. Thank you for looking into this. Yeah, appreciate it.
Sure. Okay. So thanks again. I see most of you have left. Please be in touch, Venki, and I don't know the name of the other person here. But in the group, you can post anything in the group. I'll be happy to respond. Okay.
Yeah, definitely. Madhu, I definitely want to, you recorded this information.
Yes, so
If
I'll be
it's
posting
possible to
the
send the
record back.
link also. How do you
Yes.
Yes.
post? Through Madhu will post to the WhatsApp group. Okay,
No, no.
fantastic.
What I'll do is I'll post it on YouTube and give the link in the group.
That'll be fantastic. Yeah, with
Right, right.
our
Yeah.
private one.
I'll
Makes sense.
post the
Yeah.
link on LinkedIn as well. Yeah.
Great.
Okay.
Hey, thank you, Dr. Raghu Shankaran, sir.
Sure.
Thanks, Madhu. I appreciate your time. Take
Yeah.
care.
Thank you for all of your time. Thank you. Have a
You're
nice
welcome.
evening.
Bye. You too.
Bye.
Bye.
Bye. Yeah.
Bye.
So you can
I will
stop the
stop
recording now.
recording now.
Yeah.
Why won't